Okay, let's jump right into this explainer because today we're going to fundamentally shift how you think about building wealth. We're moving far away from that stressful, everyday game of betting on asset prices, and instead, we're going to look at how the ultra-wealthy build literal fortunes by owning the actual infrastructure of flow. We call this the toll road economy. And by the end of this, you'll see exactly why the richest people on Earth don't just play the game, they own the board.
You know, there is a seriously stark contrast between regular retail investing and true elite wealth. The average retail investor is basically always praying for asset prices to go up. It's that classic buy low, sell high strategy, right? You buy a stock or maybe a piece of real estate and you just kind of hope the market smiles on you. But the ultra-rich, they operate in a completely different paradigm. They honestly don't care about price action or market fluctuations because they own the road itself. They collect a toll simply because capital, energy, or money has to inevitably move from point A to point B. It's just a completely different way to approach wealth.
So, what exactly is the toll road economy? At its core, it's a wealth-building framework that is laser-focused on capturing guaranteed fees. In this economy, you aren't gambling on outcomes. You are simply putting yourself right in the middle of an inevitable transaction and collecting a fee for the friction. Whether we're talking about the movement of massive amounts of capital, commodities like oil and gas, or even government funds, you capture value regardless of which way the market is heading. It's all about stepping out of the casino entirely and owning the flow. All right, let's start with something accessible. Level 1, government-backed cash flow. When most people hear Section 8 housing, they usually think of it as a low-tier real estate investment or, maybe just charity. But it's actually an absolutely ingenious infrastructure play. By owning a Section 8 property, you're essentially acting as a local toll collector for the U.S. Treasury. You provide the physical infrastructure, and the government provides the guaranteed flow of money.
And this setup unlocks some incredible power. We are talking about an 18 to 25% cash-on-cash return. That means the actual cash profit you make relative to the cash you put in is huge. In markets like Cleveland or Memphis, investors are buying duplexes for, say, $80,000 to $150,000 and generating massive returns simply because the federal government is there ensuring that the rent gets paid. When you compare this to traditional real estate, the appeal is instantly obvious. Traditional real estate relies completely on the everyday tenant paying 100% of their rent, which naturally comes with high default risk. If the local economy tanks, your tenant might lose their job, and boom, you lose your income. But with Section 8, the Federal Department of Housing and Urban Development, HUD, pays anywhere from 70 to 100% of that rent directly to you. You're literally trading traditional tenant default risk for a guaranteed recession-resistant check from the U.S. Treasury that hits your account on the first of every single month.
Now that we understand how local government flow works, you're probably asking the logical next question. How does this exact same toll road mechanics scale up to the global stage? Like, how do the billionaires do it?
Well, that brings us to level 2, owning the energy pipes.
There is a quote that is the absolute secret to commodity wealth. They don't own the molecule, they own the right to move it. The richest energy barons on Earth don't actually drill for oil. They aren't running your local gas station. They simply own the pipelines, the trading contracts, and the storage facilities that the energy literally has to travel through.
Because owning the pipelines beats drilling for the resource every single time. Think about it. There's zero exploration risk. You aren't out there drilling dry holes. They secure these ironclad 15 to 25-year locked contracts, yielding steady, predictable dividends. And the fees? They're based on the sheer volume of the commodity moving through the pipe instead of the highly volatile market prices. Because they charge a toll for every single barrel passing through, they are completely insulated from whether oil is sitting at $40 or $140 a barrel. The flow is what matters, not the price tag. Just to put this massive scale into perspective for you, $10 to $15 billion. That is what energy trading giants like Vitol made in profit recently, simply by owning the contracts and the flow, without ever once touching a drill. They buy energy in one location, sell it in another, and just sit back and collect the toll in between. Okay, so we've covered government housing and we've covered global energy. But the most fascinating question is this: how do you apply the toll road model to Wall Street itself? How do the absolute wealthiest individuals on the planet capture the flow of money in private markets?
Let's look at level 3, the ultimate toll, GP stakes.
To truly wrap your head around private equity, you've got to break it down into 3 tiers. Step 1, you have the companies being bought and sold. Those are the bets being placed. Step 2, you have the limited partners, or LPs, who act as the gamblers putting their money into the fund. And step 3, you have the GP stake, the general partner. That is the house. While regular wealthy investors act as the LPs gambling their money, the ultra-wealthy, they buy a GP stake, meaning they own a piece of the firm running the fund itself.
The sheer advantage of holding a GP stake is literally off the charts. First, you get a guaranteed 2% management fee on all managed assets. If a firm manages $10 billion, that's $200 million guaranteed annually, just to keep the lights on, regardless of how the investments actually perform. On top of that, you get a 20% carried interest, which is essentially a massive slice of the profit pie when companies are successfully sold. Plus, because you own a piece of the firm's overall revenue stream, you get immediate cash distributions. That completely bypasses the standard multi-year lockup periods that regular LPs have to suffer through. You just get paid right away. It really helps to think of this entire system like a casino. The limited partners? They're the players having a high-stakes hand in the VIP room. They might win, they might lose. But the GP stake? That is owning a percentage of the entire casino floor. Why would you risk playing a hand at the table when you can simply buy a piece of the casino and collect a guaranteed fee on every single hand dealt across every single table?
And this strategy is so incredibly effective that it has attracted the biggest money on the planet. We're talking over $100 billion. Sovereign wealth funds from Abu Dhabi, Saudi Arabia, Singapore, and beyond have quietly poured over $100 billion into GP stakes over the past decade. They've realized that owning the infrastructure of finance is the ultimate wealth cheat code.
Which leads us to our final takeaway. The house always wins. Let's bring all these massive concepts back down to the ground. Here is the unified toll road theory, perfectly summarized. Across everything we've looked at today, the pattern is the exact same. Section 8 captures government flow, pipelines capture commodity flow, and GP stakes capture capital flow. Whether it's the U.S. Treasury paying monthly rent, a barrel of oil moving through a steel pipe, or billions of dollars flowing through private equity funds, the overarching strategy is absolutely identical. Stop trying to predict asset prices, just own the infrastructure and collect the toll. That is the true secret to generational wealth.
So as we wrap up this explainer, I'll leave you with this final, provocative thought for your own financial journey. Are you building assets that rely on hope, or are you building infrastructure that captures flow? Are you merely betting on prices to go up and crossing your fingers, or are you actively positioning yourself to own the road? Think about how you can apply these principles to your own life. Start small and build your own toll road. Thank you so much for joining me today. I really hope this fundamentally shifts how you view wealth creation and leaves you eager to dig deeper.